Our focus right now is on ensuring that Canadians who are staying home from work have enough money to be able to buy groceries and pay their rent. These are measures that we will be moving forward with in the coming days to ensure that people can keep themselves and their loved ones safe and healthy.
The last thing we want right now is for people to worry about job security. That's why I've asked our team to start drafting legislation to protect workers and families. If this law is passed, it will ensure that if you are in quarantine because you're experiencing symptoms or you've been asked to self-isolate, you will not lose your job. If you're a parent and you need to stay home to look after the kids while schools are closed, you will not lose your job.
Relief is on the way. That's the message coming from Canadian political leaders today as this country braces for the economic impacts of the coronavirus outbreak. Stock markets plunged again today, with the Dow experiencing its third worst day ever here in Canada. The TSX closed down 10% from its open. All of this comes on the same day that Canada announced very strict border restrictions. And Ontario's chief medical officer urged all dine-in restaurants and bars to temporarily close. So how big of an economic punch are we in for here in Canada, and how can the federal government best respond? Avery Shenfeld is CIBC's chief economist. He joins us from Toronto. Pedro Antunes is chief economist for the Conference Board of Canada. He's in Chelsea, Quebec. Hi to both of you. Thanks very much for being with us. Avery, I'm going to start with you. Can we just start with the markets for a second? And if you could break down, especially in light of what happened with the Fed yesterday, that's the central bank in the United States for our viewers, they slashed their rates to basically nothing, and still a rough day on the markets. Tell us what we should know, Avery.
Well, what the Federal Reserve is doing is making sure that the financial system is functioning, and they're doing that, and they're making sure that interest rates are as low as they can be. They've done a good job with that as well. But first of all, we're seeing the spread or the extra interest premium that businesses have to pay when they borrow has widened out. So government interest rates are very low. Corporate borrowing costs not quite so low because people are worried about default. And I think overwhelming all of that from the point of view of the financial market is, what about earnings? How many businesses are going to be shut down or substantially diminished? And key here is for how long? Because if the markets had a sense of when will things be back to normal, there might be a bit less panic. But that sort of uncertainty is exactly what markets don't like dealing with.
Pedro, can we sort of dig down into exactly that? And that is some of the decisions that we're hearing announced by various public health officials across this country, including the one we read off the top there of the introduction, in that Ontario is saying close your bars, close your restaurants. We've seen it happening all throughout the United States. We are anticipating that we'll hear more of that in the days to come in this country. What kind of an economic impact does that have?
Yeah, well, it's something that we are struggling to get a handle on. Essentially, we are going to see the shutdown of a number of key service sectors in Canada. What will be the ramifications of this through the supply chain is going to be very interesting. I think there's no doubt that this is going to be very deep for specific segments of the economy, as we just alluded to: accommodation and food, anything to do with tourism, and other service sectors, entertainment, for example, the sports and other leisure. How this plays out on the economy will depend, I think, very much on, again, what Avery pointed to, is how long this will last. There's a lot of uncertainty as to how long these measures will take a hold of the economy. And I think one perhaps ray of hope here is that we did see China successfully contain the spread of the virus. At least this is the information that's coming to us now. Hopefully, we've reacted quickly enough here in Canada that this will be temporary, and we'll start to see some relief for these industries as we head into the third quarter.
I want to talk a bit about what that relief might look like, Avery. But first, on the big announcement from the federal government today, and it was about the border, more restrictions at the border. A lot of questions for them on why basically every citizen outside of Canada is excluded from coming in, but not American. The restrictions were not placed essentially on the Americans. The ministers pointed to the economy. Can you talk a bit about the integration of our two economies? What would a border shutdown from an economic point of view be like?
Well, there'd have to be, even if you wanted to do it, some loopholes here, because trucks, for example, are crossing the border in both directions every minute of the day. There's a driver in the truck. Is he an American? Is she a Canadian? You can't just sort of say, well, now the truck has to stop and be unloaded at the border. So, for example, there's even that. The earlier guest mentioned people on flights that are transiting through the other country. So I think there's some sensitive issues there. And I don't think we want to get into, I think we're trying to avoid a tit for tat with the U.S. on this issue. We know that the Americans are pretty fond of sometimes shutting our goods out of the U.S. economy. So I think maybe there's also a longer term consideration being given here to, if we can play a little nice with the Americans, let's do it for a while. I don't think we would rule out that if the disease runs rampant in the U.S. and we have it under control, that we wouldn't change that policy. But for now, we're sort of counting on the Americans to impose similar restrictions and therefore have a similar sort of plateauing in their caseload as we do that. If they don't, I think that decision could be revisited.
And it's interesting because we heard not long after our government made this announcement, President Trump did sort of increase the warnings at least and say line all your non-essential travel. It will be interesting to see how that is sort of, interpreted by Americans. Pedro, let me switch gears back to Canada here and what we are anticipating from the federal government as early as tomorrow. Significant, that's the word the finance minister used on Friday to characterize the announcement that they plan to make a significant fiscal stimulus package. What specifically are you watching for?
Well, significant. Probably we're talking something in the range of 1% of GDP, so perhaps another 20 billion in terms of stimulus. We would like to see something in terms of a payroll tax, and this may help. In fact, the point behind it is that this may help, in fact, corporations and employers in Canada hold on to their staff. Again, this is a demand shock, really, coming from consumers, or consumer-led and tourist-led, if you'd like. So to ensure that people do have and hold on to their employment would be a positive, certainly down the road as hopefully people calm down and we see the effects of the virus contained. But likely we're also going to see measures in terms of direct measures to households for those that do lose their jobs, perhaps something stepped up in terms of EI or other transfers to persons. So let's see what comes, but I do think it is going to be fairly significant in size.
Avery, what would make this package significant from your perspective?
Well, I think that's true that it needs to be in the tens of billions, just given the size of the Canadian economy. Anything much less than that is pretty trivial. I also think that we have to be thinking about how we dole the money out over time. Since we don't actually know how long this recession, which it is a recession, is going to last, you might, for example, have a program where you describe what it is, and it lasts as long as the situation lasts, and then the overall scale of it could be bigger or smaller if it ends up coming out earlier. One of the things we've seen that, for example, Sweden announced is they're letting companies delay their payments of value-added tax, that would be our GST, as well as some other tax payments to the government. So in fact, the government is lending them money, leaving the money in the hands of the companies for a while. It will get it later from the companies when business is up and running again, so it's like a temporary loan. But trying to reduce the stress on the corporate sector, the small business sector, so that they can, for example, pay the rent on the storefront while the store is shut down. Those kind of clever ideas may be something that the government could try to look at. In addition, as was said, to making sure that people who lose their jobs still have some spending power while they're unemployed, but also as the economy starts up again, we'll want some spending power out there to get spending going again.
Let me just quickly follow up with you on a point that you said right off the top there, and that is about the recession. Is the recession a guarantee? I mean, it almost feels silly to ask it given what we're seeing right now. I bet it is. But do we know, I guess, how not how long it lasts, but how deep it could be?
So we know that it's going to be quite deep in the current quarter, because if you just add up the share of GDP that's made up not but just by travel and tourism and restaurants, but also, for that matter, education institutions that are shut down and so on, you're talking about enough to make a serious dent in economic activity. So just the things we're telling people don't do that would constitute a recession. Now, that's a weird recession because we've sort of forced it on the economy as a health measure. And how long it lasts depends on really, in part, when we can get back to normal, partially or fully. There is a second recession going on here, which is an oil patch recession. And that one, is not going to be over in a quarter because the oil companies out in, Alberta, for example, they're cutting back on their capital projects. That's going to throw some people out of work. And that's not going to be magically over when the disease sort of starts to fade away.
Pedro, can I quickly ask you the same question? I just have a few seconds left, but what are your thoughts where a potential recession is concerned?
Yeah, well, and again, I would agree with Avery here. We're definitely going to see a decline in GDP in the second quarter, and the question is how long does it last, and will it really start to affect employment in a significant way that we do start to feel the pain of this? Because of course, a recession and the pain of a recession is when we start to lose jobs. We technically define a recession as 2 quarters of negative growth. So that will depend very much on, again, how quickly we are able to stymie this spread of the infection, and whether we see this continuing into the third quarter. But I would agree. I think it's going to be very, very steep in the second quarter. We'll feel the pain, especially in certain segments that we've talked about.
Okay, I'm going to leave it there. I want to thank both of you very much for your time and your insights this evening. Thanks to Avery Shenfeld, CIBC's chief economist, as well as Pedro Antunes, chief economist for the Conference Board of Canada. Hi, I'm Vassy Kapelos, host of Power in Politics. See more of our show by subscribing to the CBC News channel or click the link for another video.